Hello everyone, I am Tris Baibra. Today I want to do a market recap on Friday. This week is Friday. We had some impact news, the flash manufacturing PMI at 9:45 a.m. So I had to wait for that time, 9:45. I don't do anything before 9:30. So if we're having any news at 45, I'm gonna wait for 45. So I just want to have a recap on this. So reason for entry, high time frame narrative, I was bullish at TGIF. Anticipated a pullback during the 9:45 a.m. the news. A pullback opposite of the direction I was looking for. I was bullish. So to the 30-minute fair value gap, which we're gonna see, then look for the 3-minute change instead of the delivery. Use that to go long, aiming for the 4-hour fair value gap that we had. This was Thursday's trading, previous day. I see previous day high, previous day low, and previous day equilibrium, previous day range equilibrium. But in the silver bullet, I got a shallow discount run. We're gonna see that created an SMT with ES. Then at 11 hour, the market started to deliver to the buy program, right? So with that said, let us see what I'm talking about. So before this, because this price has already traded through the array I was looking for. Now before that, let us see. Before trading to this, because this is the 30-minute time frame of NAS100 100 and US 500. Nasdaq, yes. So this is the 4-hour fair value gap I'm talking about before we traded there. So I anticipated a pullback. This is 30-minute time frame and 3-minute time frame. So I anticipated a pullback into a fair value gap. You can see this 30-minute fair value gap. This got that, right? So I'm gonna take a long on the next candle. This candle at the open of that candle, my stop loss is gonna be here on this low. But since this order block is really huge, I'm gonna use the min threshold with the min threshold of that order block. I may use way below, but I'm gonna be watching price how it reacts there. So I closed my position manually on this candle because it already the min threshold. So it came back to the 7 a.m. pre-market low, which we're gonna see. Now when you look on ES here, it's also having a fair value gap that we're having on Nasdaq, right? So for it, I marked it with the Fibonacci levels. I didn't draw a box, right? So let us see, because when I went long on this candle, price really came back, and this is the silver blade candle opening, the 4 or the 10. Sorry for the 4. So this is the 15-minute time frame. Also, this price had already traded or had already finished that trade. But since it is a recap, we're gonna have some maybe lessons and some recaps. So when you look on this order block, this price traded back into there. So this becomes a proportional block. A proportional block is a candle that trades back to an order block when they are the same candles. That becomes a proportional block. You can see here, price whisked through that, we got an SMT, then price never closed below that. So you may have taken some longs, stopped out, right? Let us have a look onto lower time frame. So this is 3 again. Now after me taking a long on this candle, because this is the candle that traded into the fair value gap that we had on the 30, this one, then I opened a long on the open of this candle. I took some portion off of this high. Then the silver blade opening, the 10 a.m. started to drop. There wasn't any favorable order block till 11, right? So when 10 or when the silver bullet hour started to drop, I was not anticipating to see price taking out this low if I'm to stay bullish. But you can see here, NAS100 created an SMT with ES. Now, this doesn't make the narrative or the idea that I'm having that the market is going to be bullish a fraud. That because we have maybe swept this low and price now will reverse and drop lower. When you look on ES, ES is not wanting to drop. Closed inside that 30-minute fair value gap that we had also in NQ, though it closed outside that. But we see respect there on the 15 time frame here of the proportional block. So the market is not random in what it does. So yes, we can work through, but the close tell us more story. So getting that SMT, it didn't make me to say that now the market is gonna drop. This was just a turtle soup, because the market is not random. So on the 3-minute time frame here, that hour from 10 to 11, it was not really moving to the direction I was looking for. It was just dropping, looking for PM or 7 pre-market opening low. It swept that. Then you can see that we swept that, created an inversion fair value gap. Maybe you took a long prior the 11 hour. Price came back in the 11 hour, tried to want to take out that low, but it didn't. It came, stopped there, then the real distribution was there. Meaning the hour from 10 to 11, it was just like a manipulation. Sometimes the hour from 10 to 11 is going to be a distortion, or it's going to be a consolidation. Then we get a move at the 11 hour. When you do back testing on this week, some days it has been like that. Monday was like that. We got consolidation into a 1 hour fair value gap. 1 minute fair value gap. Price wasn't moving. Then at 10, it was 10:48, 49 around that time. Next to 11, market started to drop, or started to move into the direction I was anticipating for price to move. So meaning that if 10 is doing the opposite of what we are looking for, we are going to be looking for SMTs, and we wait for the 11 hour and we see what the 11 hour does, because that doesn't mean that that I was like the narrative has switched. No, we can see that the market is moving, working through, coming back and forth. But at the 11 hour, we create this order block here. Price really went up, returns to that order block. So I could say this could be a low risk buy, stop loss just here, returns to that order block. You could also buy, aiming for what? For these relative equal highs that we have created prior the pre-market opening. No. Market opening is around here, so they were the highs, the market opening, because this is the 8:30 and the 9:30 is here. So then the 9:45 anticipated, I got yes that I got the order block. I opened price at 10. The silver bullet started to go opposite of the direction I was anticipating to see price running. So that doesn't mean that the idea is fraud or the idea has failed, but just needs you to wait and you look for the SMT and you wait for the 11 hour. The setup can be here. Maybe you took a long with this inversion fair value gap here, because we have taken a side equity here, and you could anticipate with the higher time narrative that the market is gonna be bullish. It's not just out of the blue and you say you're gonna be long because the market has taken out sell side. By the higher time narrative, we are bullish. We are looking for price to trade into this for our fair value gap, right? So we can have this inversion fair value gap here. Market goes up, creates an inversion fair value gap after sweeping a low. Then we could take a long stop loss here. So prior the 11 hour tried to come back but never swept that. So let us say you saw this and price and the 11 hour didn't, but just continue to move higher. I'm going to trust that. Why? I'm going to trust that because it's going to be a second distribution, because this is a short-term low. This is a short-term low. This becomes an intermittent low. Most importantly, it has taken out sell-side liquidity. So let us say this didn't come back here. It just ran I'm gonna use this candle. This candle is gonna be my order block. If this candle is green, the next candle is green, at the open of this candle after creating this order block, I'm going to start, because I'm already at the 11 hour. We have taken out sell side liquidity. I've got an intermittent low because it has a short-term low becomes an intermittent low. And the hard-term narrative, I'm anticipating to get bullish expansion to the 4-hour fair value gap. With the SMD that I've got, I'm trusting the narrative. So that was the AM session. So let us go to the PM session. This, you see this fair value gap? I encapsulated all this fair value gap because it is really important, because if I use this only fair value gap on here, price really weak through the increase of of that. But look how it hit that, went up. Now this is the PM session. We had the setup in the before the PM session, before the actual PM session, because that is 14, because the lunch start from noon, or let us say noon to lunch, that is 12 to 13:30. So with the PM session here, you can see the consolidation we had in the AM session. Got that, price hit that order block, rallies, takes out that liquidity buy side. We got a distortion in the noon. You can see here, noon, 12 to 13:30. Now that was in the noon. We dropped to the fair value gap of the fair value gap that was on the 30. You can see that the increase watchment is that purple color. When you come back here, that's the purple color. This is a 30-minute fair value gap, you can see here. So market came back to the fair value gap, didn't hit that much here, but say contrasted that with the low risk buy. I'm going to trust that price won't come back to that low, because we haven't hit the higher time frame array. This doesn't mean that market is going to reverse, because we have not hit any higher time frame array for it to give us a smart money reversal. So it is coming back to pick more longs or more long orders. It's coming back to this imbalance. So I'm gonna be waiting for the market to create a fair value gap. Now here, how do we choose a good order block? Because this is the first candle, because we choose a good order block depending on which candle that hit the higher time frame area first. Now this is the candle that hit the higher time frame area first, which is the 30-minute fair value gap, right? So I'm not gonna use this one, though I'm watching it. It also has an imbalance, which is a CB. So price went deep. So the more it goes deep, the more I'm gonna use the deeper candle. So when this candle closes, I might wait also for this to close, but low risk buy is on the open of the next candle. Stop loss here. And we won't anticipate price to come back there, aiming for the consolidation highs here. Then price rallies next to the increase encroachment of the, it is here the increase encroachment. It was next to the Fibonacci equilibrium, though it didn't hit that. So we are not looking for perfection. That was the drawn liquidity. Only the trade from here to here could be enough. Maybe you didn't trade that, could get that from there. So the point is, something I want us to understand is that the silver bullet, that first 1 hour to 11, most times you can get consolidation. The market is not moving into the direction we are looking forward to, or it's gonna be running against us. But we should wait for the 11 hour. 11 hour is gonna. Okay, let me do something quick here, and because it was Monday here. It was Monday. You can see this 7th Monday. It was still the 11 hour. Sorry, the you can see from here 10, 11, market started to drop. This is a 1 minute time frame. So we got that consolidation around. So still the same thing that happened on Friday, the same week. Consolidation, ranging, market not moving till the 11 hour. Price started to move into the direction. It was around, this was around 10:49, 48. They start to get there. So you can see that if you took a short here, stop loss is gonna be around here. So price consolidated, never disrespected that fair value gap. So, but it was inside that, moving back and forth, back and forth. So till the 11 hour. So meaning that the 11 hour, or the point I want us to understand that the 11 hour is really important when we fail to get what we want at the silver bullet hour, because silver bullet starts from 10 to 11. Now here you can't find something that's gonna be it's gonna be supporting for you to take a long, right? Because it started from here to here. The market just took that. Okay, you wanna use this inversion fair value gap, stop loss here. Yes, it wasn't hit, but for me I'm gonna wait for the 11 hour to give me some confirmation, because this could come take out that low again, but didn't. Nicely respected, comes order block, pushes higher, all of this till the noon. Then we started to get that consolidation that we have seen here. See, the market is not random, just because we are not yet to see what it's telling us, and that's the growth we need to understand. And you can't say that the market is random. No, it's not random, though it is uncertain. You don't know what's gonna do next, but we can predict and we can anticipate, and we have to trust in what we anticipate. So to me, I can't see that the market did this randomly. There should be something, and that's how I learn. That's how I go to the market and do research. Why did it stop from here? Why did it change from here? This is why. And that's why is where I get my knowledge. Because if it stopped here, okay, maybe I didn't annotate anything. Why did it stop here and went up? Why did it stop here and came back, took out those highs in the Asia and London, came back for discount price into a proportional block? Yes, we weak through, but this does the damage, and the close and the body tell the story. So you must know why price does something, though you can't be perfect into that. But if you have that question inside you, you're gonna do research, and you're gonna start to create beliefs that are really into the marketplace, that market isn't random. Because if you have a belief that the market is random, there's no way you're gonna trust something for a long objective. Because if it just goes there and stops, then comes around. Though when you go in, you have to also be having patience for you to wait for it to pin out to the objective. So that is personal preference. I don't know. For me, 800s to 100 handles, 100, they are enough for me. I'm not looking for a move from here to here. You can look for a move from here to just those highs. That was enough for me, and I'm okay with that. So I think that's it. That's it. And by the way, I took another entry, then I closed it manually. It was still in that consolidation, this consolidation, and I closed it manually because it was really coming against. So I didn't want to use this low as my stop loss. I was using this low, but price came, closed it manually, then did what did. I never took any other position, because I take two positions, two losing positions a day. I stop. I don't need to be, and since it is Friday, I don't need to go to the week with a huge drawdown. So that's it. I'm Traced by Ibra, and by the way, this is a Ugandan channel, or I'm a Ugandan, and possibly in the future maybe I will do some recaps in my local language, maybe for those who don't understand, like mungeri enyangu in nokutegeragana, because that's also marketing my country. So this has been the recap of Friday. Let us catch back in the next recap or weekly recap. I'll be doing some episodes on or series. I'll call them the Quad Trader series, and they won't be that I'll say deep in teaching what trading is, but there will be like some touch-ups. As you can say that we can talk about order blocks, we can talk about level lookups, something like that, but not what a pip is. So that's it, guys. Let us catch back in the next episode or the next video or the next recap, anything. So thank you all.